G'day folks, welcome back to another update for natural gas. Now the charts are still overall bullish on the trends with a bit of a bearish retrace currently in play. Before we go any further, make sure you hit that like and subscribe button to support the channel. Now we're going to look at the outlook first for March the 12th, natural gas production growth. BP plans to increase US natural gas production in response to rising domestic prices, aiming for an output of 2.3 to 2.5 million barrels of oil equivalent per day by 2030. Price forecast natural gas prices have more than doubled over the past year, driven by heightened demand and geopolitical factors. In terms of bullish indicators, rising electricity demand from AI data centers is increasing natural gas consumption. Mergers between power producers such as Constellation's acquisition of Calpine aim to enhance natural gas power generation capacity. In terms of bearish indicators, infrastructure challenges, particularly in regions like Texas, may limit the ability to meet growing electricity demands. In Australia, regulatory hurdles and intertwined energy and climate policies are hindering the development of new gas resources, leading to potential shortages. For natural gas demand for AI data processing, the rapid expansion of AI data centers is significantly increasing electricity demand. The International Energy Agency forecasts that power demand for data centers and AI could double by 2026, adding electricity usage equivalent to that of Japan. In the US, data centers' share of electricity consumption is expected to rise from 4% to 6% between 22 and 26. This surge is straining power grids, especially in regions with high concentrations of data centers, leading to increased electricity prices and concerns about infrastructure adequacy. So we always start with the long-term trends and we drill down to the smaller time frames. So looking at the monthly first off, we've got the price above the moving averages, likewise the CCI 150, and they're both bullish at the moment on the monthly. On the weekly, likewise, bullish movement on both the price and the CCI. And on the daily, we actually hit this resistance, a new resistance we've drawn at 49.30, and it's been pulling back from there. Now, this hasn't hit the price moving averages yet, but notice the CCI has moved into that moving average range, giving us a somewhat neutral signal on the daily. If we go to the intraday chart, here we've got the 1 hour, and we use the daily as a reference in terms of which way we trade. Now, because it's neutral on the daily, we avoid taking long or short trades, and that also aligns with this bearish divergence, lower highs on the CCI versus higher highs on the price on the 1 hour chart. And we drew this little rectangle there, and that was a 23-38% Fibonacci range target. And the way we measure that is draw a Fibonacci from that high to that low, and that low is a significant low before that divergence started, and that's a 23-38% region. Now in this case, the price is just short, actually it's just touched that 50% Fibonacci, and more often than not it does rest at those areas. You can see there the 38% had a bit of a challenge breaking through eventually, and then currently sitting at the 50% level. The key area to watch is the 60%. If it drops below that, we may see it, then the next is going to be this diagonal support line. So at the moment, bearish movement on the intraday, and the daily is also showing a bit of a retrace to the downside. So what I've got here on the daily, I've marked some ticks and crosses where we go long. Now this one we don't go short because the price hasn't broken through the moving average range of the price moving averages. So we avoid going short during this period. So we only go long during this period. We stop the long trades at that point where the CCI breaks into the moving averages, and we start long positions from there on. And that's what it shows here. The top chart here is a profitability chart on the 1 hour chart, and it starts from that period back there on according to the daily. So we start running the program and the trades. You can see that each of these bars represents entries in and out, and you would have stopped the program, the trading, I should say, or got the automatic programming if you like, when that CCI breaks into that moving average range. And that's where on the stop loss strategy, it would have closed out with $3,810. On the average down approach, you'll notice here a couple of times it's averaged down, and where it sort of shows a bit of a stepping process, and you would have stopped it at the same period, and at that process the equivalent area, it generated about 11,450. Now you would not have taken long trades during this period from that point until this point here, and that's then marked according to this area here from that point. Let me just mark it on the chart so you can see. So that area there is in, we would have started taking long trades from about that point on. So you would have avoided that drawdown on the average down approach, and you would have started trading from around this area again on the hourly, and then it showed you subsequent gains. and then again you would have stopped taking long trades when the CCI broke into that moving average range. But overall, had you kept the trading going, the stop loss strategy generated 7,400, and the average down approach generated 29,140. But again, you wouldn't have taken those trades there, so that would have been a bit less on both of those. But you can see there technically it would have made more for the average down approach. Next we'll look at BOIL. So on the monthly, it's still bearish. It's below the moving average of the price chart. There's no CCI for it, so bearish movement on the monthly. On the weekly, we've got this still in play, a bullish divergence, and you notice here the price was declining as opposed to the divergence of the bullish movement on the CCI, and eventually broke through that moving average range more significantly. It did break through there, but notice the moving averages were still very broad. You want to see them flatten out, then reverse like they did back here, and that's where you would have started going long in accordance with the weekly. Here on the daily, again, it's hit this resistance at 107.11, and it's currently struggling to break through that. And we're very likely going to see a pullback to this target area. And I've drawn a target area that goes back to that significant low there. Was it there? No, it's not there. When did I draw that? Yeah, it was that point there. So that just needs to come down a bit. So roughly speaking, you can see that I've drawn a target area, and we expect the price to come back toward in that range, and more than 90% of the time it does hit that target area. So at the moment, if you're going long and you've got positions open, probably a good idea to take your profits. But you can see there lower highs on the CCI versus higher highs on the price, and nothing significant in terms of a pullback yet, but again, today we've got a bearish candle. If we go to the intraday chart, again we've got another bearish divergence currently in play, lower highs on the CCI, and that CCI versus that price movement, again struggling to break through that resistance at 107.11. But at the moment you'll notice the CCI on the daily is also showing a bearish move, so bearish on the daily and bearish on the 1 hour time frame. So I've got the back testing here. Again, this is on the 1 hour time frame, so we take the direction of the daily. So let me just get rid of this Fibonacci to make it a bit clearer. CCI, I've got a tick indicating where you would have started long positions on the 1 hour time frame when the daily broke above there, and that coincided with this period back here. So I've got here the stop loss strategy and the average down approach. So, and I've marked it with an X on the daily, and that corresponds with these periods with the X on the back testing. So on the stop loss approach at that point, you would have generated about $211, and this one you would have generated same period about 507 because you averaged down a bit there. So that position would have been open, but you would have been closing it out once you saw that. So it would have been a slight decline, but that's okay. Avoid further drawdowns on your trade. So this is KOLD on the monthly. It's bearish below its moving averages of the price chart. There's no CCI for it, so bearish movement on the monthly. On the weekly, very strongly bearish below the moving averages on both the CCI and the price. And on the daily, we've hit this, well, it's currently in a bullish divergence, higher lows on the CCI versus lower lows on the price. Hasn't actually bounced yet, but the CCI is starting to move to the upside, but the price is still stubbornly dropping. So as soon as we see that approach and possibly break through this moving average, we'll then start considering a bullish move to the upside. So I won't draw a target for it yet until we see that bullish move on the daily. If we go to the intraday chart on the 1 hour, again this is the daily as a reference. You can see there we've got another bullish divergence. Now I'm going to move that trend line to that point there, and that one there to that low there. And I've drawn this target area already, probably a bit prematurely, but that needs to probably drop a bit. So if we go from there, I'll draw it up to there. It still applies at that level there, the 23.38% retrace. So assuming it breaks through there on the hourly, we expect it to hit this range as a minimum. It could go higher, but that's a minimum retrace level. So looking at the back testing for KOLD, we would have gone short from this period back here, and I've marked it at this point here with a back test. So on the stop loss approach, we would have stopped the trading at that point there with it marked with these X's, and that was when it hit this bullish period on the daily. And at that point, if you stop the trading there, the stop loss approach generated $295, and the average down approach generated $346. And then again, you could have gone short again at that point there, but just you would have noticed the the CCI was starting to rise, even though the price is still dropping. But then as soon as you saw this trough on that CCI and that trough on the price, you'll notice we had a bullish divergence. So you should not have taken trades, and that's why I've marked it with the cross there as well. So, but at the moment, avoid going long until we see on the hourly, until we see the daily break higher on the through those moving averages. And lastly, for UNG on the long-term trends on the monthly, it's broken up through those moving averages of the price chart. The CCI has been bullish as well for a couple of months now. So bullish movement on the monthly. On the weekly, we did have a bullish divergence back here versus lower lows on the price. Eventually it broke through those moving averages. The moving average band widened, so confirming we should start trading long positions in accordance with the CCI also being bullish. So, and on the daily, it's currently similar to the other charts. It's hit this resistance up here at 24.13, and currently you've got a bearish candle, possibly a bit of a to retrace back towards this target area. So again, bearish movement at the moment, bearish divergence on the CCI versus high highs on the price. It's got a double top up there. Very likely we're going to see it pull back to this moving average range. Now if we go to the intraday chart on the 1 hour, again in accordance with the daily, we should only be taking short trades, but wait for this to break below the moving average range of the price chart as well. It's a bit too early because we might just see a bit of a retrace into this target area of the divergence, and then a bounce, in which case you would have been caught out. So always make sure when you're trading, like it was back here, you would have been going long during that period because the price is also above the moving averages. And you would have avoided short here because the price is still well above the moving averages. So the back testing for UNG, now we started the long positions from this point back here when the CCI broke above the moving averages, and so did the price. And that's indicated by this period back here on the back testing. And stop taking trades at where those crosses are, and that's where the CCI on the daily broke into that moving average range, and that's where those crosses are marked on the back testing results. So on the stop loss approach at that point would have generated $173, and on the average down approach $238. Now you wouldn't have taken any trades, and I've marked the cross here as well, even though they broke bullish movement on the CCI and it was bullish on the price. Why wouldn't you take that long trade? Is because you've got this bearish divergence versus higher highs in the price. Now the price can still go higher, so long as the CCI keeps dropping. We're going to consider that a warning sign. So again, find another trade, another instrument to trade. You don't have to chase every trade out of the one instrument. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.